This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is, of course, Jason Brewer, the CEO of Marula Mining. It's good to be talking to you, Jason. I think it's the first time since before Christmas here, but a bit of good news. You've signed your first copper sales agreement with the European-based Global Commodity Trading Group for the high-grade copper concentrates produced from Kinusi. So I know we've been waiting for this for a little while, but welcome back. How are you doing?
It's good to see you, Mark. I'm doing well. It's been a very hectic start to 2025, and it doesn't look like letting up, put it that way.
Well, let's just talk about this sales agreement then. So as you understand, this is for an initial delivery of 250 tonnes and then an offtake for a further 1,000 tonnes per month, which is about 50% of the planned production for copper concentrates from the phase one here at Kinusi. So, I mean, that's right, isn't it? And how are you feeling that you finally got this agreement over the line?
Yeah, look, that's correct. So we're planning on doing 4, possibly 5 initial trial shipments to a variety of trading groups based there in Switzerland, in Europe. This is the first one. This is one to a group that was actually on site a couple of weeks ago. They requested some additional samples of the material that was already bagged and ready for sale. And as soon as we got those high-grade assays, we were able to conclude the agreement. But yeah, it's for this initial shipment and then a further 1,000 tonne a month of the copper concentrates from Kinusi. So how do I feel?
Okay.
Yeah, relieved, but still plenty more to do there.
And you've got a further sort of 3 discussions that are ongoing here. So, I mean, I guess it depends in negotiations how they go. But if your production target is sort of 2,000, how are you going to make up for potentially the 3 off-takers? Or are you looking to expand production?
We will be looking to expand production. There's no question about that. And that's just a matter of capital investment, because clearly the size of the project there, doing a couple of 1,000 tonne a month of copper concentrate sales is well below the levels that the mine should be operating at. But we've gone into just because we're capital constrained, let's be honest, as a junior company. But we have 4 groups, so it's going to be 5 in total. 4 other groups that we're talking to, all European, Swiss-based. They've all got different kind of size specifications on the concentrate and where it's going to go. So we're just working with them some additional requirements that a couple of them want, but we're expecting to conclude them in the next 2 to 3 weeks.
Okay. And then you'd need to inject capital to up the production effectively?
No, look, at the moment, the initial trial shipments, we've got the capacity to deliver those tonnes. We initially announced it was just about 1,000 tonnes. I think when you split it all up between them, it was about 1,050 tonnes. One of the groups yesterday actually came back. They were going to get 350 tonnes. They've now asked for 1,000 tonnes. So it just means that delivery is going to be made over the course of February and March, as opposed to all in February. So, but then once they come back, and we're expecting very positive feedback from them on the material, then we will look at the level of capital necessary to get us up to the tonnages which they all want.
Right. Okay. And in terms of payment then, I know you get 90% here on the initial assay check here, and this is at the Dar es Salaam port, and then the remainder comes at the final port there. So at the moment, do you not have a price sort of set? Is that determined when your off-taker actually looks at the grade and you then agree a price? Just thinking if investors are thinking 1,000 tonnes per month times X price, then they can work out roughly what it means.
The reference price is the LME price, which is the market accepted price for copper. And that's based on the copper cathode. Obviously, we're selling a copper concentrate, so we get a percentage payable of that LME price. And for one such contract, it is 75%. Okay? Right. So you get 75% of the LME price. And just for ease of calculation in my head here, the LME price is, say, $9,000 a tonne. It's actually $9,438. You get 75% of that times your grade. Okay, so assume we're doing a base grade of 20%, we will be realizing per tonne of concentrate we deliver $1,350 a tonne. Please check that on your calculator there, Mark. But I think it comes.
Yeah.
It's $1,350 a tonne. The total costs for us, mining, processing, transport, all to site are conservatively between $100 and $150 a ton. So you are making some very significant, very robust earnings just on these low volumes there. Clearly, as we move to phase 2 at Kinusi, where we're going to be producing a cathode, then the earnings profile is going to increase quite dramatically.
Yeah, indeed. Okay, so just working on that number, then you're looking really in the above $15 million in theory revenue annually on 1,000 tons a month.
Yeah, just 1,000, which is 50% of the current planned phase 1
of the
which is well below the capacity that operation should be achieving.
Okay. Good. And I know you mentioned grades there. The sales agreement is based on a minimum 20% copper concentrate grade. So you're confident you've got that there? Do you have to assay it, or is that really going to be done by the off-taker?
No, we will do our check assay. We will do our own checks before the concentrate is transported from the mine site to Dar es Salaam. But we were here yesterday with the Takela directors going through the whole QA, QC procedures and so on. We're very confident that getting grades above 20%, close to that 25% benchmark level, that's what we'll be doing.
Okay, good. And in terms of phase 1, Jason, how's it going? Is it on track to be commissioned for the end of this quarter?
Yes, it is. And there will be a series of RNSs confirming everything over the course of this month and next. Like I say, we had the Takela guys in here in the office yesterday. Obviously, some very positive news on this first sales going through. Effectively, we've kind of classified it as commercial production now for Kinusi, because obviously you're only commercial if you sell something. So we've ticked that box with them, and now it's about basically getting the capacity to increase production significantly and have that plant fully commissioned to achieve the 2,500 ton a month of initial copper concentrates. So yes, we're on track firmly for that.
Good. I've noticed investors are keen to see pictures of trucks being loaded. I think that's a real big... I've seen that before with mining companies as they start to get a shipment away. So will you be on site, or someone on site, getting pictures and showing investors?
Do we use social media much, Mark? You tell me. Look, we're not just going to be showing pictures of rocks and high-grade ore and everything. You'll see that material leaving the site, being loaded, and so on and so forth. So 250 tons is what, 8 to 10 trucks. So heading towards that. So you'll see that. Part of the discussion yesterday was on logistics. So we're going through that process. Okay,
good. So revenue this quarter, in effect.
Yeah. I think if you look at the RNS, we were saying this first one to be completed by the 7th of March. If you give a few days either side of that for the check assays and everything. So give ourselves, 4 weeks from today. And people can do the numbers. We've just given you the numbers there, Mark. 250 tons by 1350, I think, rough, because obviously the copper price does float, but that's good earnings for us just from an initial trial shipment.
Indeed. Well, before we get on to some other questions that people have sent me, as they often do, very keen followers of Marula here, just on the, I know you've just started getting the sales away, the shipments away and those initial sales, which is fantastic. Good to be getting into revenue there. But just on the point of perhaps scaling up on that and capital needed, could that come from the sales revenue coming in, or are you going to need to, do you have access to that through the AUO fund? Just thinking about how to upscale.
It's going to be a bit of both. We've got the AUO tranches available. We've got the flow, and literally all of that cash flow that comes through will be plowed back into the operation. Plowed back in the operation for both mining, but also for that phase 2 diamond drilling program, which is there because we really do need to give investors a better understanding of just how big that project is. So we need that diamond drilling program that will give us that JORC compliant resource, and we need that, and we're committed to doing that because it gives us confidence and it gives investors confidence.
Okay. Good. Just a few quick fires. Then we're going to plan to do a Q&A with the shareholders in Telegram, but there's a couple of questions that always come up. First of all, Jason Brewer, when's he going to buy on market or dip into the shares himself?
Look, you've seen me buying in the last quarter of 2024. I think I picked up over 2 million or so on market. So it's a closed period now, as you can imagine. There, but over the course of later this quarter, I think you'll start to see
Okay.
me through Gathoni Mashai buy more shares on market.
Right. Okay. Nairobi Stock
At these
Exchange.
prices, yes, of course. I see a lot of
Okay.
value there.
Right. Nairobi Stock Exchange listing.
Yeah, we're just settling down a few things here in Kenya. I was just with the National Mining Corporation this morning. That was my earlier meeting today. There's a number of initiatives that we have to, from our own internal aspects, that we want to get signed off here. And that's kind of building a bigger presence in Kenya. And we think that's necessary to make sure that we get the attention from Kenyan investors. So that is on track for this quarter. But there is a few announcements which should come out in the next 2 weeks, which will give a better understanding of exactly what we're doing in Kenya and what our plans are.
Okay, good. Blesberg, if we can, just briefly, the JORC assays and the CPR, a few investors were getting concerned that the lithium results were perhaps a bit poor.
No, we've just, again, for this one, we had the call, myself, Henk Van Zille, who's our general manager of operations there. We just had the joint venture discussions with the group back in China. We're just going through that process. The CPR, the various reports that accompany that will be going out, I believe, in early March. And the reason for the delay there, and to be very clear, the reason for the delay was when we initially did that drilling, there was a number of minerals that were identified that there wasn't the proper assay work done. So we've had re-assay work of a number of things. The lithium is not just occurring in the pegmatites. It's actually occurring in the host rock. So you've got the pegmatite, which is surrounded by the granites, but what you've seen is a lot of that lithium seep into the granites. And that's created a potentially significantly larger resource there at Blesberg. But then you've got a number of other commodities, minerals there, which have been identified. The niobium, obviously we knew about the tantalum. The beryllium, an incredibly high value product. The rare earths. So the mineral suite there is far, far higher. And that's in addition to the mica and the feldspar. And we've got people on site next week on the feldspar to finalize the offtake on that. So the CPR has had to be rejigged on a number of occasions to take into account very high value products, which make the overall Blesberg operation far, far more significant than it ever was before.
Okay. So there's a lot of work going on with Blesberg, updates to follow.
Yeah, Jacques Perot, who's our competent person there, he's been working on that for a significant amount of time. He's incorporating a lot of the recently received SkyTem, the geophys work, the satellite imagery. There is a tremendous amount of work, and that work has expanded. You remember, Mark, when we first got into Blesberg, it was 1,051 hectares. We then picked up Northern Cape, lithium and tungsten, which we completed on just the other day. That added another 15,000 hectares to that site and brought in some very strategic tungsten. We then have done the application for the Blesberg expansion, which is another 7,000. So we've gone from 1,000 hectares to over 23,000 hectares. A massive step up in our footprint and what our ambitions are on that region. And the CPR is including all of that as well. So that's why there's been, unfortunately, our appetite has got bigger, and that's led to additional work having to be done to support it.
Okay, fair enough. Just a couple of other questions. The NEO suspension recently, I think, is maybe concerning some investors about if that could happen to Marula again with the audit that's coming up. So, how can Marula avoid a suspension effectively?
We've actually got a very experienced mining-focused auditor in place, Moore Stevens. Martin, who's our COO based in South Africa, has worked extensively with them in the past. They're already well up the curve. And on NEO, for instance, they've done Moore Stevens are the same auditor there. They've done the work already on the South African subsidiaries, for NEO. So that work's proceeding very, very fast. It ain't happening because of the measures we've put in place. And people will say, we heard this before. Moore Stevens know what they're doing. They have the capacity. They've been to operations there. They've sat down face to face. We've had that interaction with them where we did not have that before with our auditors in the UK. So we're very, very confident that all our corporate governance, our financial management, all of those systems are in place now to allow us to get our regulatory reporting out well ahead of schedule.
Okay, good. And the final question I got here was about the recent AUO subscription at 3.75. That was positive, people are saying, but it was used as an excuse, something for MMs or market makers to drop the share price. Do you have a strategy for dealing with this?
I can't get rid of market makers. I can't. Like the tax man, they always make money. Okay, so they're there in the market. What I need to do is build enough momentum in the stock, in what we're doing, to basically, I wouldn't say make them redundant, but basically don't give them the excuse to drop the price. We've got to make a compelling enough story that even when we do and utilize those AUO facilities, we're doing it for the right reason. I think on the last one there, we came out very quickly with what we're doing at NCLT, and we've come out quickly on the copper. The same thing now as we move into the manganese at Khalifi. We're doing some negotiations with, one of the world's largest manganese offtake companies, one of the biggest steel companies, who want our manganese. I was in Cape Town presenting. People want our manganese. We've just got to remove the excuses for market makers to play around with the stock. And they've played with our stock, don't get me wrong. They are the lowest of the low. But no. The market makers will use every excuse to make margin. That's their business. They're there to make money. I need to remove those excuses for them to drop the price. I need to make it clear that when we are utilizing facilities where we've used the AUO facility, for instance, that is for such a good reason that the price of the stock can only go up. And we've got that in front of us. You've seen the copper sales, manganese sales, Chinese joint venture, some other stuff on the rare earths. All of this stuff is going to add significant value, but it needs to be delivered on. And if we can deliver, then market makers have got no excuse.
Okay, well, I look forward to following that, Jason, of course, and seeing you deliver on some of those elements. You've set quite a high standard for yourself there. But thank you very much for your time today.
Thanks, Mark. Appreciate it.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.